first October Lunch and Learn Financial Literacy for Your Business. And this is our, oh, I'm sorry, I put part 3 on there. It should be part 2, Developing Your Tax Strategy Post-COVID-19. And we are happy to have and thankful to proven winners for being sponsors of our event. And here's a short video.
Good morning, members, viewers, potential members. My name is Sean Vernon. I am the food, beverage, and agribusiness banker here at PNC. I cover Central and South Georgia. PNC has a specialty segmentation that focuses exclusively on food, beverage, the greens industry, agriculture. Because of the specialization, we can provide targeted value, added products and services to our clients and potential clients. Our specialists know and understand the industry, the suppliers, the distribution channels, the market conditions, the operating cycles, and the seasonality of the greens industry. Here at PNC, we really have a level of the greens industry, and we're really focused on enhancing our partnerships and relationships here in the greater Atlanta and in the Georgia market. And as always, I'd like to thank Mary Kay and UAC for giving us the platform to providing additional financial literacy to members, future members, and everyone else. So thank you so much.
All right. My name is Aneri Hernandez. I am a business banking relationship manager. I work closely with Sean, also identifying many business in the food, beverage, agribusiness as well. So this way we can help support them with whatever their needs are, especially in this particular time, right? So that in a nutshell, more of a support role for Sean. In the event that you cannot get in contact with him, you have another point of contact as well, instead of having to sit in a branch and wait for somebody to assist you. And let's move on to the next slide, and we will introduce our guest speaker, Rob Tamburi.
Hey, good morning, everybody, and thank you for having me. I'm not sure who exactly is in the audience today, but I can tell you back in February, this presentation was quite successful. We touched on a lot of key areas on running your business like a business and tying it into tax strategy. I'd like to begin that when most people form a business or start a business, they're normally good at a particular trade or occupation and forget that they really are not just doing work, but they're running a business. And we see this all the time in our practice. Again, my name is Rob Tamburi. For those who were not participating in February, CPA with almost 30 years experience. Our offices are in Sandy Springs in Atlanta, in Jacksonville, St. Augustine in the North Florida market. And I am pretty much the tax partner. Any key questions about taxes, please ask me. But to get started, when you start a small operation, especially beginning as a mom and pop, compliance is the key word. Thank you. This is the slide we're going to start with. When you have a business, you have to understand what we need to do first to get that going. So let's take a look at this. The first thing you need to know is you need to register your business with the Secretary of State. Okay? One, that legitimizes it. And 2, that begins the foundation for your books and records, okay? A lot of people, when they start out, use their social security number on tax returns and tax documents. What I'm referring here is not your personal taxes per se, but your business, okay? I would highly recommend, even for LLCs, which we'll talk about shortly, and the structure there, is get an EIN number. 1, it professionalizes you, and 2, it keeps your personal information off W-9s, and other forms that you need to give to your vendors. Okay. Next thing you need to do as you start out is you need to have a business bank account. Okay. You should not be using personal accounts for any type of business matter. And to do that, you need to bring the information from the Secretary of State and that EIN number that we just spoke about, which you can apply on your own at irs.gov. And then the next step is actually have your business bank account. It seems very basic, but again, right, we're trying to run the business like a business, not just a side hustle or a sole proprietorship, okay? Take a break from there for a second, go over to the 4 different icons and understand that when you run a business or grow a business, it's very important to have your key advocates with you as the business is growing and working during the year, okay? So once the business is open, someone needs to do the bookkeeping, okay? Bookkeeping, folks, it's an expense, it's an investment, but more importantly, it begins the bones of your business. You can only understand how well your business is doing if you have proper records so you don't tell yourself stories about where you're spending money and what you're investing money in. And when I mean investing, I mean assets, equipment, anything related to run that business, okay? To do that, you need to have a relationship with your banker because your banker is going to ask for books and records. Your accountant, in conjunction with you, will work with you on tax matters. And then there's the ancillary, your business attorney, having your proper insurance and things along those lines. So it's very important that all 4 people in those blocks are kept up to date on what's happening with your business. With books and records, most people use QuickBooks, okay? It's not necessary, but that's probably the easiest format to create financial statements. We'll talk about that in a second. You can't run the business without at least liability insurance, okay? Something will happen eventually, even if not intentional, and you need to have the proper insurance to keep your business safe. Without insurance, something happens, obviously, that could put you out of business. Licenses. Okay? What specifically are you doing? What county are you doing it in? What village are you doing it in? And are there state licenses? This is beyond the scope of today's presentation because there's different rules. Please make sure you look into that and make sure you are compliant. Okay. Let's go back to books and records. When you set up your books, 9 businesses out of 10 should be on a cash basis, okay? It seems obvious, but you can also do accrual. To the layman and to the small business, cash basis is how it sounds. You have money coming in, that's revenue or sales to the business. You have money going out for expenses, those are expenses of the business. Okay, buying assets like computers, vehicles, and things along those lines are not expenses, but are assets, things that have long-term value. Okay, the bank cares about that, and so does the IRS. But we'll open it up to questions in a few minutes. Tax documents. The IRS is very procedurally oriented. Okay, it's an honor system code that we have here, and there are various deadlines. So an example would be you couldn't pay any vendors without having what you call a W-9 on file. A W-9 is proof to you that they're legitimate. What is their EIN number? What is the name of the business? How much are you paying them? Most likely, these companies will be issued 1099s by January 31st of each year for the prior year, okay? Generally speaking, if you pay somebody more than $600 a year, they need that document. It's not optional. Without that document, by law, you're not allowed to deduct those expenses. And then come all the other tax documents. How your company is structured will determine due dates. So Corporate deadlines for S Corps, which we'll touch on, March 15th. Individuals, April 15th, unless we get extensions, which is what we're dealing with now, okay? The monthly accounting is very important to you, like I said, because one, it's holding you accountable on where your dollars are going, and you also understand for the bank and for quarterly tax reporting, especially for payroll, you know, what you need to process and what you're doing. I would highly advise you not to do the accounting yourself or have a spouse do it unless they're a qualified bookkeeper or at least have a background in accounting. Trust me, it's cheaper to do it right the first time than to redo this, and mistakes can be costly on your ability to get funding and worse, underpaying or overpaying your taxes, okay? Tax returns, we'll touch on in a little bit. Budgets and forecasts. Once you kind of have a sense of what your numbers are, internally, even if it's very basic, you should be having some kind of budget and forecast on your cash flow, okay? Cash flow is what keeps the business going, all right? You know, you need to know if we're going into winter months, and that tends to be your quiet season, how are you paying your overhead expenses? There's enough cash going into the down cycle to do that, and then would you have a credit need perhaps, and you know, do you have a working line of credit with the bank that you could tap to get through into the spring season? You need to know about that ahead of time, okay? Not prior. Okay, so let's tie into tax strategies. All right, everything's about record keeping, and there are various different types of structures that you can have your company, and there are pros and cons to each. So once you have solid bookkeeping and records, we all need to understand the alphabet soup between LLCs, partnerships, S corporations, and C corporations. For the purpose of today's webinar, understand that if you are self-employed and you have your own LLC, okay, you'll still be a Schedule C as in Charlie on your taxes, okay? The IRS doesn't acknowledge LLCs. That's a state designation, okay? But if you work for yourself and you have an EIN number, you should be an LLC. Two unrelated people that work together, okay, or own a business together, really, the partnerships. You partner together. There's a special tax form for that. It's called a Form 1065, okay? That return is due by the March 15th of the following year for the business year. So if you're a partnership this year, March 15th of 2021 is your filing date. What an S Corp is, it's a corporation that's a legal breathing entity outside of yourself. And the main difference that you need to know today is that an S Corp, the income and expenses passed to your personal taxes. And with a C Corp pays its own taxes, okay? So, and there are benefits to doing that. Corporations give you your best liability protection, but you'd want to talk to your insurance advisor and your banker to find out what, you know, if they have a preference on structure, okay? Working capital tax impact, all right? Working capital is basically the lifeblood of the company. At any given time, you need to ask yourself, do I have money to make my payroll, to buy supplies, to save for taxes, to invest in infrastructure of the business, and equipment? Your industry is a pretty equipment heavy, okay? And there's various tax ramifications on the equipment you buy. There's something called accelerated appreciation, where if you buy large fixed assets, even if you finance them, without going into the weeds, you can take a big piece of that expense and deduct it in the year you put that equipment in service. Okay, that's called Section 179, and the base amount's $25,000. So again, you could finance equipment right now in October, put it in service next month, and take a big chunk of that expense off your tax bill this year. Okay, that's what we call by tax plan. All right, so you have to time that as it relates to your need, right? So if you need something early next year and you've had a profitable year, you want to look at that equipment now because that'll help you. Don't wait till next year to buy it because you're going to want to overpay your taxes or potentially overpay your taxes for this year. Useful life and depreciation. This is relevant because what you buy is equipment for your business. The IRS designates useful life. So it could be a 5-year asset, a 7-year asset. And what that's telling you is you have 5 or 7 years to recapture that as a partial expense or depreciation. So before you buy a piece of equipment or finance a piece of equipment, you need to understand what it is that you're buying and how that would impact your taxes. Talking about equipment, you can lease equipment or purchase equipment, okay? If you're a new business, you probably don't have history on what would be more beneficial to you, but there's some clients we work with that have purchasing allocation models every 3 years. The day feel the useful life ends, the repairs will cost too much, so they buy equipment say every 3 years, they accelerate the depreciation, and then they recycle the new purchase. Okay, depending the wear and tear on your equipment, leasing may be more advantageous. Leasing is a fancy word for rent. Okay, so in this situation, your rent payment or lease payment may be more than you're able to deduct on a purchase, and that may make more sense to you as far as being able to turn that over every couple of years and get into a new piece of equipment. Again, depreciation considerations. What is the need on the equipment? How long does it last? And the repair life. These are the things that you need to be factoring. What a money factor is a convoluted term on your interest charge. Okay? Bank loans have interest, leases have money factors. Talk to your banker about what that money factor is and find out, does it make sense? Maybe from an interest perspective, you're better off borrowing the money from the bank and not doing the lease. We've touched on maintenance. Sometimes as equipment ages, you have to allow more working capital for that maintenance of that equipment. It may make sense by year 3 or 4 to replace it. And again, you need to factor that into your cash flow analysis because if you have an off year and your equipment is aging out, you need to have the cash flow to make these repairs. And I understand a lot of this is not fun and to think about. You rather just think about your business. But as a business owner, there are things that you need to think about throughout the year. Just like employees have to do things they don't like, business owners need to stay on top of this. Otherwise, you're going to have big expense surprises. Let's talk about profit maximization versus tax and business valuation.
An issue I have with our CPA now, well, any CPA that we've ever used, is that I don't think there's like any kind of partnership, and I wondered if you would suggest like a 3rd quarter review with your clients, because once the year has ended, you know, obviously you maybe didn't perhaps make the purchases or the things that could help you, you know, financially from a tax situation with equipment and things like that. And so I was wondering if you would recommend consultation, you know, paid consultation, to actually go over where your numbers are at that point in time and any kind of, you know, future thoughts about future needs and things like that.
Well, I'm glad you mentioned that because that's exactly what we're going to start doing after October 15th. The reason why most people have dysfunctional relationships with their CPA is they're not thinking of most of what you just spoke about until February. And
Right.
Guess what? In February, we don't have time for you either. In February, you process.
Exactly.
You work on the prior year's numbers after you've already created the strategy with the client. Okay, this is where the value of the CPA and your financial people have done the values in Q4.
Right.
The winter time is processing and settling up. In fact, there's very little we can do to help you come winter, except for some retirement programs, IRAs and SEPs and things along those lines.
Right.
But you need to go into year end to kind of figure out where the business is and how that'll impact your taxes. Because, there's a lot of things we say in taxes about it being deductible, but as your income grows, you may lose the ability to deduct certain things. Certain things are phased out. So, correct, absolutely. You need to have a quarterly meeting with your CPA, and if they're not calling you, you should call them and ask for that, because that's how you save on taxes, and that's how you plan.
Right.
In fact, sometimes it may be a recommendation to change the business structure for the following year. Maybe you should go from an LLC to an S corp.
Mm-hmm.
Your revenue warrants that.
Mm-hmm.
I mean, if we can educate all CPAs to do that way, that's really where the future is. Especially as the IRS is getting more data, a lot of it will be automated going forward. But for the sake of time, I just want to touch on profit maximization. Listen, nobody wants to pay any more taxes than we need to, all right? If you look at my bottom triangle first, optimization versus avoidance, okay? There's a lot of ways legally to get your tax bill down to the lowest that you should pay, okay? Avoidance is not a strategy, all right? The bankers will tell you at PNC, if you're expensing things or not doing your taxes correctly because you don't want to pay taxes, you're also reducing your income. When you reduce your income, it inhibits you to get loans, okay? If your books and records are not showing much profit, PNC is not going to be able to lend you any money. Worse, when you want to go sell your business, I started this presentation with the end in mind, okay? If you have no real assets on your books and you've expensed everything and your taxable income is lower than it, quote, should be, because it's avoidance, not optimization, I don't think you have a business to sell. You have to rely on tax returns. So understand what you're doing here. Be smart, because a lot of people, their business is their biggest asset. And when they want to retire, they want to be able to sell their business or bring partners in. And you're only as good as your books and records and your income tax returns. To be honest, that's what the valuation, it's cash flow. So you want to be able to sell for maximum value. So that's why books, records, and tax compliance, they're not an expense. It's just the quote unquote investment in your firm, because the worst thing you want is to one day have a real business on your hands. I mean, a pretty big business, and look back and not have the records to back up all the work and labor and efforts you put in, and realize you don't have what you think you have. I want to thank you. That's what I have today. I'm be more than happy to address some questions or some specifics. Always push back on questions if you don't understand. So like if someone says your C Corp rate is at a lower tax than the S Corp rate, perhaps on your personal, well, that on the surface is absolutely true. But what they don't tell you is if you take dividends from that C Corp, you're taxed twice. So fully understand, as an example, how that any change or how your company is structured, how that impacts you directly, because there's pros and cons. S Corps are taxed on what they earn, not what you take. Okay, so if you earn 100 grand and leave it all in the business, you're going to pay 100 grand. If you take it all out, you're still going to pay taxes on the 100 grand. That's what it's earned. So keep that in mind as far as your cash flow. Always leave working capital.
I have a question for you.
Yeah.
Presentation, you stated that, based on the conversation that you would have with your CPA, and maybe based on how well the business is how well the business is going for the business, and the need to change from an S Corp to a C Corp or from an LLC to whatever type of setup. How difficult, how easy is the process? Will things change in terms of like a new EIN number? What will be the process?
Okay. There are two general things you need to think about when you create a company. One, how many people are going to own the company? But the other real issue is your business the type of business to keep a lot of money and profits in the business, where you're reinvesting in the business? Or is it more like a consultant type company or a sales company where you're living on distributions? Okay. The quick answer is From LLC to S Corp is when the business is growing and you can afford to take a reasonable salary, okay, way beyond the profits of the business. And that's a FICA, a Social Security tax savings strategy, okay? You do not need to change EIN numbers. There's just some forms you need to do with your CPA to make the election, okay? With a C Corp, if you're really living on a salary and investing most of the money back into business for long-term use, then it's most likely it would be better to be a C Corp, all right, than an S Corp, because you're only going to pay 21% on your net earnings, all right? Where at an S Corp, you'll pay whatever your rate is. So if you're keeping the money in the business, generally a C Corp's the way to go. If you're pulling a lot of the money out, an S Corp's the way to go once you're at that structure. Because if you're kind of on a lower end, then a Schedule C or an S Corp is going to get you to the same thing, and there's a lot more compliance work with an S Corporation. Additional returns and payroll, company, and all that. Did that answer your question, Sean?
Yes, sir. Thank you.
Yep.
Rob, I have a question for you. Do you do much work with landscape businesses or small construction businesses and such?
We've had some construction businesses in the past. We've had some landscaping businesses in the past. I know the industry pretty well. A good friend of mine had a landscaping business for many, many years. I wouldn't say we specialize in it, but we do have experience.
Okay, that's good to know.
Yeah.
Well, this was a great presentation, and I really appreciate you taking the time right when you're in the thick of tax season.
An extension, you need to file by October 15th.
What do you anticipate will be in store for people next year with the whole PPP and other relief programs?
Well, it's a timely conversation, and of course, it's completely political. The way it stands right now, and if anybody else has updates from the bank, I'd love to hear it. As long as you qualify for loan forgiveness, if you have a PPP and meet the eligibility requirements, the loan will be forgiven. Mm-hmm. The real thing I'm worried about is that although the loan is not taxable, the way it's structured right now is even legitimate business expenses that were used with that loan money are not deductible. So it's really a backdoor taxability thing, and they're not being very honest with the taxpayers right now. But it's such a moving thing that we have not even done any PPP forgiveness applications. One, they're long and boring, and two, I think they're going to come out and just waive. They're going to just do automatic forgiveness or one-page form on a lot of these, but we haven't heard anything yet. Have you?
No, we're still waiting to hear because I believe there was a stimulus bill that was presented and it wasn't passed. And one of the stipulations there is any PPP proceeds for $150,000 or less will be automatically forgiven.
That's right.
So that means you're going to have to provide all that extra documentation. But we haven't had news on that. I know I have a few clients that have received an invitation to apply for forgiveness, but they're waiting to see if there's any movement.
Yes.
So
clients have contacted us. I said, we're not going to do anything yet until we get further clarification, because I'm going to have to charge you, and then it's going to wind up being forgiven anyway, and it takes a lot of time. But Mary Kate, to your point about year end, whoever wins the election will determine the tax strategy for the new year.
Rob, I thank you for that tidbit of information of encouraging a lot of business owners to at least meet with their CPA quarterly. I can't tell you how many times, and I'm sure Sean has seen this himself, where we get applicants that all of a sudden, hey, something happened and I need financing. And it gets to a point where we start looking at it, looking at the financials, and they're not positioned to be able to get the financing that they need, right? Because whatever their tax strategy was, it was kind of like there was no strategy, for lack of a better way to say.
Right.
So it's important, and I encourage you to, whoever your CPA is, if they're not reaching out to you quarterly, make it a priority, especially if you know that the business is growing. if you know that you foresee yourself, even if it's in your plans to buy a building, if you need the additional space, you need to plan for that ahead of time, because by the time you get to the application, the work has already been done 2-3 years back. You don't want to get to the point where you decide, you know what, I want to buy a building, but you haven't fulfilled any of the prerequisites, which is, making sure that you have at least 2 years of positive cash flow, which we'll go over on the next piece, the next seminar, the next webinar, which is coming up pretty soon. So, but thank you for that. And I encourage everyone, meet your CPA quarterly, minimum.
Thank you. Yeah, the next webinar is in 2 weeks, so we'll get information out about that.
2021 will be here very quickly, and let's see what the year end holds.
Many thanks again to our webinar series sponsor, Proven Winners. Please join us for a great garden walkthrough in the following video. Have a great day.
Hi, this is Jane from Proven Winners Color Choice, and today I'm really excited to introduce you to my friend, Andrea Wilson-Mueller. Andrea and her husband Michael co-own Inside Out Landscape Design, which is in Frankfort, Kentucky. Now, Frankfort, Kentucky is a really awesome place to go visit. I highly recommend it. If for no other reason, if you like bourbon, there are a lot of really cool distilleries. You'll have a lot of fun. There's also some really good plants and some really good plants people like Andrea and her husband. If you need to know the nitty-gritty, Frankfort is a USDA Zone 6B, and they get about 46 inches of rain a year. So Andrea is a big fan of native plants. So today she's going to show us a garden that she did that features a lot of our native plants, native to North America. So this is a landscape that is at a house that's in really a pretty swanky subdivision. It's a situation that needed a more traditional landscape aesthetic. Probably something really crazy like a complete meadow garden might not fly in this neighborhood. So she's done an awesome job of taking some native species and using them in a very traditional landscape setting. And I think you're really going to like the results, and you're really going to enjoy hearing Andrea explain why she's chosen the plants she did.
I'm Andrea Wilson-Mueller, APLD of Inside Out Design in Frankfort, Kentucky. We are standing in the Native Oasis Garden in the west end of Frankfort, and the whole idea and premise behind this garden and all of the phases that it included were to include as many native species as possible for pollinators, bees, butterflies, and host plants, nectar sources, wildlife habitat, and providing shelter, food, and water for those creatures. So we've included many proven winners in this garden, and also included many straight native species as well. In the foreground you can see beard tongue, and then behind those we have the little lime hydrangeas, which provide a really nice pop of color and are used throughout to tie the design together with some continuity. So at the mailbox here, and then as well as at the entrance of the house, we have little lime hydrangea. We also have Arctic Fire red twig dogwood, which I love for the winter red stems to provide some winter interest. And for the natives, we have some, well, of course these are native too, but we also have sweet coneflower, which I love the more unique bloom on that. And then baby Joe Pie weed, also a proven winners. And then we also have mountain mint, which is a wonderful pollinator magnet. And you can see all of the bees, wasps, and moths and butterflies swarming that. And then aster for late fall color. And then we also have some itea, spice bush, and weeping hemlock, winterberry holly, and also the male pollinator for the winterberry holly.